everyone, you're watching Weekly Forex Outlook by LiteForex. Today we will talk about the outlook for the major currency pairs for the period from January 7th to January 11th. Let's firstly talk about the main currency, the US dollar. Here is its chart of the US dollar index. As you can see, the current week started with the decline, and the previous weeks were also negative for the US currency. Despite the fact that US non-farm payrolls were much better than expected on Friday, the indicator NFP gained 312,000 in December, and this is the strongest jobs report since February 2018. So despite this positive figure for the USD, its recovery was only short-lived because American unemployment rate increased. American ISM manufacturing PMI fell from 59.3 to 54.9, a sizable decline. In addition, the chair of the US Central Bank, Jerome Powell, said that the Fed is not on the preset path and it will be sensitive to downside risks. This made traders think that the Federal Reserve won't probably be raising interest rate many times this year. In addition, markets risk sentiment improved, and this led to lower demand for the USD. It happened as China on Friday made a move of aggressive monetary easing, and there are hopes of a trade deal between the United States and China. So it looks like the USD has more room to decline this week as well. Let's now see what is on the agenda and check the economic calendar at LiteForex.com. This week, I'd like to point your attention to the release of US ISM Services PMI late on Monday. On Tuesday, there will be a release of Canadian trade balance, and on Wednesday, there will be a meeting of the Bank of Canada. The central bank is expected to lift interest rate from 1.75 to 2% level, and it might be positive for the Canadian currency. So I suggest you check the currency pairs which have Canadian dollar and see the opportunities to bet on the rise of the Canadian currency. Also on Wednesday, January 9th, the British Central Bank Governor Mark Carney will speak, and his comments may move the British pound. And also the US Central Bank, the Federal Reserve, will release the minutes of its December meeting. I can remind you that the Fed raised interest rate in December, and it also lowered the forecast from 3 rate hikes in 2019 to just 2 rate hikes. So it might be interesting to know what is some background information related to this decision of the US Central Bank, and it will have an impact on the USD for sure. On Thursday, the head of the US Central Bank, Jerome Powell, will speak once again. He may reveal something else about the Federal Reserve's monetary policy. And Friday will be an interesting day as well. Australia will release retail sales figures. Britain will release GDP growth and manufacturing production. And so far, economic data from Britain were rather well. So despite Brexit, British economy is doing fine, and this may provide some help to the British pound. Final release will be US CPI, Consumer Price Index, Consumer Inflation Indicator. And given the fact that oil prices declined in December and there were various sorts of concerns related to trade wars, the indicator is expected to decline. Such decline will be negative for the USD. So we've gone through the major events of the week, and now we are ready to revisit the charts and see where the targets for trading these currency pairs may lie. Euro dollar weekly chart, we can see that not much has actually changed. Once again, euro dollar is remaining in a tight sideways range between 1.1310 on the downside and 1.1450 on the upside. The pair is currently pushing to the upper border of this range, and if it succeeds to get higher, the natural level to look at will be the psychological level of 1.15. It's rather close. The moving average is located at 1.16, so this is the level to consider as well. On the daily chart, we can see the levels marked here. The euro will likely pressure the upper border of this range. So we will either trade on the break of the range, or the euro dollar can still remain in this range for some time more. The British pound made a significant decline last week. It tested levels below 1.24. However, I'd like to point out that this movement in the British currency was more technical, related to some orders at the market in the broad sense. The British pound was quick to recover, and we can see that it is pushing above 1.27 right now. So the full focus in the upcoming days will lie at the levels of 1.2835, 1.29 and 1.30. So the levels of resistance, which are naturally above the current price, will draw attention of Forex traders. Currency pair US dollar Canadian dollar has descended from the highs seen at the start of the year. There was a sharp decline. Oil is recovering. This is helping the Canadian dollar, and the broad decline of the USD also contributed to the decline of this currency pair. We are now testing resistance on not resistance line, of course, the support line in the area of 1.3350. The next level to watch is at 1.33 and then 1.3225 and 1.3160. So the movement to the downside will likely continue. It will likely be substantial if we break below 1.33. And once again, I can repeat that the outlook for the actions of the Bank of Canada is positive for the Canadian dollar, and as a result confirming the negative scenario for the dollar-Canadian dollar currency pair. Japanese yen was the most volatile currency last week during the first week of January. The fact is that during the holidays at the start of the year, the amount of market liquidity was very low, and this low liquidity in the Forex market, together with traders' risk aversion, together with the report of Apple, which reduced its sales forecasts and shaking the stock market, all of that led to a spike in safe haven demand for the Japanese yen, and as a result, the yen has sharply strengthened versus the USD, versus the riskier currencies like Australian, New Zealand dollar, Canadian dollar, and the British pound, by the way. So as we can see on the chart of dollar yen, there is a spike down to the levels around 104.65. Then, of course, the pair went above the level because it was not really justified by fundamentals. And now you can see that the pair is trading around 108.30 level. Still, As the USD will likely remain under pressure this week, and we expect some weaker data and probably some cautiousness from the Federal Reserve, then it looks like the pair may retest the level of 107. On the upside, resistance will be located at 109.60 and 110 level. Here is another example of this big movement in Japanese yen. We can have a look at the pair New Zealand dollar versus Japanese yen. And here a slow recovery is possible. Resistance is at 75.50. Australian dollar spiked down versus the USD last week, but is now recovering, and the levels to watch are 0.72 and 0.73. Same recovery is observed in New Zealand dollar, and if we get above 0.6760, the target will be at 0.6810 mark. Gold is also strengthening versus the USD. It had tested the line it broke before, and now is trying to settle in the area of 1290. 1300 is the next level for the gold to take out, and 1310 is the next resistance on the upside. Finally, Brent oil is recovering. We can see that we have now reached level of 58. It seems that the asset has made a bottom around $50 a barrel and can continue pushing higher to 60.50 and 62 in the near term. This was all for today. Thank you for your attention. Visit LiteForex.com and trade with LiteForex.